Please read this disclaimer carefully before proceeding further.
Hello and welcome back to analysis of gold XAUUSD. My name is Vic. Thanks for joining me here. Let's start looking at the higher time frame structure first, and then we'll continue to talk about the rest of the stuff. So, what we can see here on this smaller structure is that we have a W pattern here, and this can also be treated as a double top if you want to treat like that. When you have a double top sort of a scenario in the market, you have to be a little careful because usually what happens is that when the market reacts to the previous structure level, like creating a double top or double bottom here, this becomes kind of liquidity area. Why? Because majority of the people think like this is going to go down because of double top, and they'll put their stop losses somewhere around here. Even when it starts to go up, they'll put their stop losses just above the previous high, and this becomes a very good liquidity area, and the market tries to go one time like at least once more beyond this level and violate that double top or double bottom. So be careful, like this thing can actually go up once more before it can fall down. You should be aware of that, because if it starts to move up, like this can be one of the scenarios. And we can look at that as completion of an extended W pattern. So it is something like this. It can go somewhere around here. Something like this can happen. So you should be aware of that condition. Okay, right now this W pattern has been completed. This was posted on January 13th, I believe. So this has completed. It went little bit higher just to test the previous structural level here, or previous supply zone, if you want to call that. Right? It went little deeper in there and started to fall. Now in this structure, we have multiple structures. So we have another W pattern, which is the extended one, and in our FCP room, we have been monitoring all of these for a few weeks now. So once the W pattern has completed, the market is expected to fall down, and this is what I suggested a couple of weeks ago, that market was expected to fall down because of completion of W pattern. Now, when you have structures like this, it is always it is always better to have a plan ready. So this is what I posted on January 13th, and this is what I mentioned in my previous analysis as well, which was posted 2 weeks ago. Like market completed this W pattern, this bigger one, and it completed the smaller one, right? And that's why it is falling down. So right now, if you just focus on this fall, this particular fall, this has nothing but this is the profit target of the bigger W pattern that we have got. Okay, so this is the profit target here. So it has reached the first profit target of bigger W pattern, which means that market can bounce up. Okay, because until it breaks through the first profit target level, which is here, right, we cannot expect it to go further down to the next profit target. Okay, so that means in the coming days or coming week, it can actually start to go up. So that should be the case. Like if the market starts to go up, you should start taking long positions here. Okay, because we are right at that support sort of area, and if that support is broken and you get a good confirmation, then only you should look for short. Okay, it will be much more clearer when we look into the other things in a second. Okay, so this is what we can deduce from here. So right now this is actually in the middle ground, and the chances are that it can go up more before it can start to fall. Okay, now let's go to the previous analysis, right? So this is the previous analysis that we had. Now it has become little confusing now. The market has come back down into these FCP zones and all that, right? This has become very, very um, confusing now. So what we're going to do is actually have a fresh one. So I've already done that for you, and this is what it looks like. So I'm going to focus only on the current structure here, and there are a few things that you should be aware of. Now before going there, let's look at what envisage as well, what it has been telling. Now if you look at the monthly time frame, this candle looks like it wants to become a bear candle by end of this month, right? So it is still possible, right? We are still left with a few days here. I think near about 1.5 weeks or so. So it can still turn into a bearish candle. Now, one of the things that you will notice, that there is a Bollinger Band here. The market tried to do what? It tried to break out above the Bollinger Band, but it has been pushed down, which is usually a sign that market wants to reverse down. So on monthly time frame, I think if this month does not, if it meant like ends as a bearish candle, or even if it ends like something like this sort of candle which has long wick at the top, the next month can be a bearish candle. So I'm expecting more bearish move to come in into gold on the monthly time frame, but obviously it remains to be seen how this month ends. Okay, so this is what we have on monthly time frame. Even though this is looking bullish right now, everything is bullish, everything is blue, everything is bullish, but it depends on how this month closes, and based on that we will be able to find out whether the next month is going to be bearish or bullish. Okay, let's go to the weekly time frame. On weekly time frame, we had a very good fall here. Okay, now this is not one of the strongest candles actually, and I'll tell you a reason in a second. But what we can clearly see is that market is right now kind of overextended here, and at any moment in time, we can get an early warning, early sell warning on weekly time frame. We also have a gap here, so this line is a gap. Okay, and we know that gold never leaves any kind of gaps. There are a few other gaps which I'll show you in a second on the chart, but it never leaves any kind of gap. So it can actually turn into bearish at any moment in time, but we trade what we see. Okay, so these are all the things that you should be aware of. These are all the scenarios that you should be aware of, because if and when the market changes its direction, or if and when the market changes its structure, then you can plan ahead based on these scenarios. Okay, so this is what we have on weekly time frame. Now, if I go to the daily time frame, what has happened here is that we got a red signal here, and we got a red signal here. There was divergence, clear divergence here on what a trend here, and then we got a signal here on daily time frame, and this was the profit target. The white dot was the profit target, and it reached the profit target nicely. It was supposed to actually come down to close this gap and touch the water curve, which it has not done. Okay, now this can still happen. So what we can expect is that in a day or so, it can come down, touch the water curve, close the gap, and then go back up. That's quite possible. Okay, so beware of this scenario that in coming days, maybe like as soon as the market opens on Sunday, which is tonight actually, on Monday or Tuesday, like the market can come down and then can go back up. Okay, so this is quite possible, quite a possibility here, and that's on daily time frame. It is still bearish. This is still bearish. Okay, so that is a possibility. Another way of looking at it is this: the market fell down, it went up into what? Into 20 moving average here, and then it created an engulfing daily candle, which means that there is a possibility of bearish move on daily time frame. Okay, if I go to the 4-hour time frame, now on 4-hour time frame, you see that 200 moving average was not touched, and the market has not even come to close this profit target here. We got a signal here, sell signal, sell, but it has not reached the profit target yet. There is still a possibility that it can fall down. So what can we can expect is that, in line with the expectation from daily time frame, it can continue to fall, maybe a little bit lower, and then start to go up. And in that process, it will probably complete a W pattern like this. Okay, so in coming days, you can in a day or so, we can expect market to come down. Okay, unless, and this will be invalidated if let me actually zoom in. So it will be invalidated if the market closes above this particular structure here, right? Because the structure here, if you can read, this is like this. Okay, so the previous structure is around here, which is near about, let me put a line, approximate line, so that you know what we are looking at. So approximately here. So if it closes above 1940, then we may not have the downward move that we were expecting. But this profit target has not been touched yet, so the market can still fall down. That's on 4-hour time frame. If I go to the 1-hour time frame, this profit target has already been touched. The market has touched that, and it has started to go up a little bit. If I go to the 30 minutes time frame and show you what is happening here, this profit target is still available, right? So at some point in time, this is going to it can actually fall down to near approximately 1914 level or so. But it may not just stop there, because that's the minimum profit target. What will happen is that if the market starts to fall, then it will form an M pattern. and it will probably come down to somewhere around here, or even revisit 1900, or even go slightly lower than 1900, because all of that will create an M pattern or extended M pattern. And when M pattern will complete, then only it will start to go up. So you see, in a day or so, the market can come down four over daily time frame, 4 hour time frame, and on 30 time frame. All of them are suggesting like this. Okay, now this will be invalidated if it actually goes and closes beyond 1940 level or so. Okay, okay, now let's go and look at 15 minutes time frame. On 15 minutes time frame, we can clearly see that we have a gap here. This is the gap which is available around 1930. Okay, and this has started to turn bullish. So as soon as the market opens, it can probably go a little bit higher, and then it can come back down. Okay, now let's go and look at the chart. So if I come back here, okay, and look at the 4 hour time frame. Now there are a few gaps there, so I'll post this chart below this video and also in our Telegram channel, which is free to join, and you'll find the link of that channel in the description of this video. um, okay, now all of these blue lines are gaps, and gold never leaves any kind of gaps open. So there are several gaps which are available. So one of them is 1989, other one is 1982, then we have 1929, 1909, 1888. All of these are gaps, right? Now, we do not know in what order and at what point in time they're going to get closed, but they will be closed, okay, at some point in time. So this is what we are looking at. The market can, this is what I was just telling you about, like, in the what I envisage based analysis, that market can do something like this. It can go up and it is probably creating an M pattern. It can fall down a little bit, 1909, or even lower than that. It can close that gap. Now there is another gap which is 1818. So if it actually goes beyond this, then it can come down to close this 1888 level as well, and then it will start to go up. So if you are looking for a bullish movement, ideally you should be looking at it from 1940, above 1940, okay, or from 1909, or you should be looking around 1888. Okay, so these are the levels. Now 200 moving average is also coming very close, so it can actually fall down to touch that. So do not be surprised if it goes slightly below the 1909. This entire area is basically where I should be looking for a buy, if you want to, like, go for swing trade. Okay, now if this market is creating a W sort of pattern, then the next level that we are looking for is 1950, which is the midpoint of this W pattern. Then we have 1962 as our FCP zone. Okay, and if the market continues to go higher, then we have two gaps available: 1982, 1989, which can be touched and filled. And then we have this FCP zone, and the market can actually revisit 2000 level once again, which is part of this FCP zone. Okay, beware of few things here, which is basically this: the market overall. If I just if I just switch this thing off, the market overall can also be creating, it could also be creating a head and shoulders sort of pattern, right? Remember, I posted this on the Telegram channel that we had a head and shoulders pattern, and that has played out very nicely. There was a trend line broken, and the market has fallen down very nicely since then. Now, if this market could be, like, going up, then it can come into this resistance level here, and it can form a head and shoulders. Okay, so these are all the scenarios that you can have. And for the short term, as I said, like, once again, let me zoom in. So what we can have is something like this: the market could be creating an M pattern here, which is completing here approximately at the same level, or it could be coming down to near about 1888. That is an extended M, and from here, or from here, it could be going higher to create a W pattern. And when W pattern will complete, the market is expected to fall down. Okay, so this is the scenario, and the levels are present here on this screen, and I'll post the levels from, or the screenshot of what I envisage as well, in the description of this video. So if you found this analysis useful, make sure you hit the like button, subscribe to the channel, and share it with other traders and trading communities. And I'll see you in the next one. Have a great trading week.
If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to Vikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students and also look at the brochure. The brochure has a lot more information including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to Vikinsa.com, and under training section you'll be able to see and submit this form.